Well, welcome back. Sam Hudson, as well as Brian Grete, joining us for our marketing roundtables this weekend. All right, Thursday, a little mixed trade, Brian, but we saw February just that free fall when it came to grain and oil seeds. But it seemed like when the calendar turned to March, we actually had some momentum there. So what changed?
Well, money flow. At the end of February, the funds got out, liquidated long positions in a big way, and with the flip of the calendar, as often is the case, they returned as buyers. We'll see if it continues or not. But this is a money flow thing. It doesn't have a whole lot to do with the fundamentals, to be honest with you.
Well, speaking of the fundamentals, there were some rumors this week, Sam. I mean, when you look at some of the rumors that China was coming in to buy things like corn, soybeans, sorghum. But at this point, at least on Thursday's report, we didn't have any confirmation of that, correct?
Correct. Yeah, rumors are all they are still at this point. And when you look at overall export demand going into next week's USDA crop report, corn exports still 13% behind, and inspections aren't that much prettier. And so I think we have to expect that we're going to see another cut there next week. It's really more of a matter of how much. And when you look at the fact that we could be providing a bigger carry out or carry into next year on the heels of these outlook forum numbers, it just helps reinforce that we may bridge the gap here as long as Mother Nature cooperates. And I think Brazil's going to help us do that. The pace of their harvest, I think, is going to help influence what price does in the meantime.
Yeah, so Brian, at this point, as you see commodity markets, searching for any bullish news at all, something that really you have to feed the bulls daily. Is there anything brewing on either the supply or the demand side that could continue to support prices?
Well, demand side is a concern for corn, for wheat, obviously, and soybeans doing a little bit better. So we need, but like you said, we need a bullish catalyst. The Argentine situation, the crops are small and getting smaller. I think the market's become kind of numb to that. We probably need, if there's going to be a short-term crop scare, it has to be something in Brazil. And the most likely there would be on the corn side of things. The safrinha crop, the second crop was planted later or beyond the ideal window for a good portion of that. That doesn't guarantee that the yields will be down, but it does increase the odds that you could face some sort of a weather issue, lack of moisture as we get out of the rainy season down there, an early frost that would maybe end the growing season before the crop is fully mature, those types of things. But that's nothing that's going to happen short term. That would all be, a month or two down the road.
Yeah, so we talked about demand, not a pretty picture there, but we are keeping our eye on what's happening in Ukraine. And just this week, we saw Russia saying that it will not approve that Black Sea grain corridor, that deal, unless sanctions are removed. So now it looks like we do have some concerns about that. Is that something that could fuel the market?
Well, I guess it could. Russia's going to do what Russia does. They have record exports planned for wheat the second half of the marketing year, and so it would behoove them to talk up wheat prices if they could with that amount of exports going out. I think this will go down to the 11th hour, the same as it did in November, and we'll get an extension of the deal. It's a matter of whether it's another 120 days or whether it's a year, as Ukraine wants. And when all's said and done, though, I do think that the extension will be granted, and Russia will probably get a few things added on their side of things. We aren't going to lift the sanctions from the West.
Sam, talking about wheat, we have some problems here when look at the plains and some of those areas, just that extreme drought situation. But when you look at supplies worldwide, how do wheat supplies set?
Well, this goes on the heels of what Brian was just talking about here. I think it's become a lot easier for the market to kind of call these headline bluffs at this point. We're a year into this conflict, and you look at stocks usage here in the U.S., and they're still up around 30%. Really didn't even move a muscle. And so, we can talk about the tough conditions and winter wheat crop and localized issues. I think that's going to speak to basis and cash spreads as much as anything. But when you look at the weakness we've actually seen there over the last few weeks, I think it's just the market telling us, hey, we got another wheat crop coming here in the U.S. Even if it's lower than expected, we can probably afford to lose some of that acreage or some of those supplies in general, and that could offer some additional acreage to corn and beans here this spring. So from a price standpoint, we really don't need it. I think if we see any positive movement there, it's going to be more short covering in nature on some of these scares along the way. But at the end of the day, nothing's really changed.
Well, what are some of the prospects for planting this year, as well as looking at the crop insurance price that we saw really being made here in February? We're going to get Sam and Brian's thoughts on that later on U.S. Farm Report.